In an earlier video, I mentioned the subject of correlation. Correlation is the way in which pairs move in either the same direction or the opposite direction at the same time. For example, the dollar Swissy here. The dollar Swissy, when the dollar Swissy is in the downtrend and coming off this channel and bouncing back down, then the euro dollar most of the time is going in the opposite direction. The way that we use correlation is twofold. One is, for example, if we were looking to long the Euro USD at this point here, we would go to the dollar Swissy and check and see if the opposite is happening on that pair at the same time. So we've made a decision we're going to long this pair here. Final check, we go across to the dollar Swissy, and at the very same time the price has touched and moved away from that trend line. The other way in which we use correlation is the fact that a short on the dollar Swissy there is virtually the same as a long on the Euro USD, and therefore if you were to take both trades at the same time, you are in effect doubling your risk. If your trading rules say, for example, on a small account are that you will risk a maximum of 5%, then if you were to take both trades at the same time, you would either be risking 10% or you would have to halve the risk on each pair and therefore risk 2.5% per pair. The problem with that strategy is you do incur extra spread costs and you have more trades to manage. This is an excellent site that shows you the correlation of the different pairs, and you can check all of the pairs that you're looking to trade, and you can adjust the time frames and other settings. Here you can see the options of the pairs that you can trade, and then we have another column here on the right hand side. So all of these you can tick the boxes of the ones that you do trade, and you can also select the time period. Now this defaults to 50, so it will default to 50 days, 50 hours, 50 weeks, depending on the time frame that you are looking for. If you wish to look for a longer time, then obviously just change that figure. I have loaded my pairs on this chart. I'm not interested in 5-minute correlation. I trade mainly from 4-hour charts, but I will look at the hourly as well as the daily. And you can see here the Aussie dollar. The Aussie dollar, when the Aussie dollar is moving up or down, the euro yen 88% of the time is moving in the same direction. Euro USD 92%, the pound 91%. The CAD is moving in the opposite direction, almost 90%, as is the Swissy. Therefore, all these trades, if you are trading on smaller time frames, are virtually the same trade. Now, this does change. If you look back over a longer period of time, then the figures will be different. Also, the figures are different when we look at a daily correlation. For example, on the daily, the euro yen and the Aussie dollar is only correlated opposite 44% of the time, so it's not as great. And for example, in this case, the dollar Swissy is only 19% of the time opposite direction. It's just something you need to pay attention to. When you look at the Euro USD and the pound on a daily for the last 50 days, is 50% of the time. It is usually higher than that. In past experience, it can be anything up to 80% of the time. The Swissy remains 90+% of the time opposite direction, and the Aussie dollar USD is usually correlated more than the current figures. But it's something that you need to bear in mind. The final option is weekly correlation. If you are trading off longer time frames and you want to avoid all the chatter and the noise, then you can see on the Aussie dollar the main one here is the CAD. 85% of the time is going in the opposite direction, the pound 62% of the time, and the euro yen 55% of the time. Finally, the correlation can be very helpful when you're looking at a potential breakout. So we here have had a 2-month channel on a 4-hour chart where price has been bouncing off the bottom and top lines of the trend lines. What happens next? On the Euro USD, if you recall, this was that FOMC news and we had a spectacular move down. And on the Swissy at the very same time, the Swissy made a huge move up. So it can be used for confirmation for entries, but you have to bear in mind, more than anything, do not expose yourself to too much risk. If you are in too many trades at once, and let's say all the trades are against the US dollar, and suddenly some major news comes out against the US dollar, then price could race on all pairs at the same time. If you get lucky, you could win big time, but if you get unlucky, you can blow an account. Learn to take advantage of correlation and use the website that I showed you, forexticket.co.uk.